Please enjoy this free lesson on how to set up and use stock charts that also includes how to use charts to make predictions and set up stock trades. And the website I'm on is stockcharts.com, and I'm going to walk you through the whole thing. I realize that people watching this will be at various levels of experience, and maybe you've seen some of my stuff already, but I promise this would be assuming that you know absolutely nothing. So that's the level I'm going to start off with. And so if you know some of this stuff already, maybe just treat it as a nice refresher, revision. Make sure you've got all the concepts clear. So there it is, stockcharts.com. Once you got there, later on I'm going to show you how to set up the screen to how you want. But first of all, I'm going to use this, instead of using slides like I have done in the past, I'm going to do this live and show you on screen what we're looking at and why. So this here is a chart of the S&P 500, and we know that because I look in the top left there, it says SPX with a $sign, and that's called the ticker symbol. And I can enter up here in this top left, I can enter whatever I want to. So when you hear a stock pick from me and I give you a ticker symbol, sure, you just go ahead and buy it and do as you're told, like I explained this morning in the execution part about being disciplined and organized and just following the instructions. But if you want to check, you can come in here and you could just enter that ticker symbol I've given you right there, and you'll be able to see where I'm coming from. So once you enter that there and you click update, you'll get whatever chart you want. So top left tells you what kind of chart this is. So first, let me just draw your attention now to the bottom and look across here, and you'll see that this is months and years. So this is obviously a chart going along the bottom of time, and on the right hand side this is the price it's at of the major index of the USA and the world, actually, the S&P 500. So there should be nothing here that makes your eyes glaze over. Okay, we spoke about this earlier, this I don't want to get involved in stocks and I'm scared off by stocks. We're going to get past that now, because you need to get past that now. As I explained earlier, if you want speed and results, there's nothing better than stock trading if you're doing it right. If you are, remember the three things: POD, patient, organized, disciplined. And you don't have to be that patient, of course, but sometimes we have to wait a little bit, but it is the fastest way for sure. So this is grade school stuff, right? Look, it's a chart over time. There's the line, it's going up and down over time depending on the price. There should be nothing there to scare you away, and if it is, then you might want to consider that you might be being a little bit silly. So let's try and add a few. What we're going to do is going to add things to the chart, one thing at a time, and to put a little bit more detail to the chart. And what you'll notice is gradually, but you'll start to be able to read what before this session you would have looked at and thought, wow, that just looks like a really complicated chart. So the first thing I'm going to do is change this straight up and down line for something that gives us a little bit more detail. I'm going to come down here and I'm going to, under here, type, instead of solid line, I'm going to click on something called HLC bars, and I click update, and there, same chart but a little bit more going on. And what it is, you see, if we take a look at, say, one of these bars here, you'll notice that there's a little horizontal peg. I'm going to take that off for a second. There's a little horizontal peg, and then there's this vertical line. And what does that represent? So first of all, this is a chart called a weekly chart. And you know that because it says it up there, weekly. And what that means is that every one of these little lines is a week of action on whatever it is you're looking at, stock market, individual stocks, anything. And during that week, this vertical line represents the fluctuation in price, up and down like that. So between Monday and Friday, 9:30 a.m. to 4 p.m. New York time or Eastern time, that's the fluctuation during the week. But at Friday at 4 p.m. it finished the week right there on that horizontal peg. That's all this up and down means. It's giving you fluctuations, and it's giving you a little horizontal peg to show you where it actually finished the week. And that's it. That's all that's going on there. And already you could start to see past the things that I think put a lot of people off. Now we're going to add something else, because this is all well and good, but how do we know? How do we have can we have a sense of, okay, it went up there and it went down there and now it's going up here. How about we get a sense of perspective? What is this in relation to? How do I know, is this good, is this bad? Well, obviously going down is bad and up is good, but is it acting in a way relatively good or relatively bad? So what we do how to do that is we create an average. And you know what an average is? It's the average over what's the average age of people watching this. That's an average, right? It helps us figure things out instead of looking at a mass of different ages of all the people watching this right now. That would be a jumble to my eyes, wouldn't it? If I could say, oh no, the average age is 62, that would help me out, wouldn't it? It's not exact, but it's like, I can pretty much try and maybe cater mostly to 62-year-olds. I mean, this is for everyone. I'm just giving you an example. So an average. So and in this case of a chart, though, because this is a moving thing, it's changing over time, isn't it? So I need to update that average constantly, right? Because there's an average for this week, and then the average for that week, and then so we're going to change things up over time. And at any given point on this here, I'm going to ask, okay, great, but what was the average price over the last, let's say, over the last 40 weeks? And that is a very common one, what we're going to look at now. Give me an idea. Is this price good or bad right now? What was it like over the last 40 weeks? So let's come down here, and we're going to come to this section here where it says overlays, and I'm going to go down to simple moving average. It's just gone off the screen, but that's what I'm selecting. Hang on a minute, let me just move this up a second so you can see. So simple moving average, that one. Click on that one. And then next to it, there's a number. I'm going to change that number to 40, as in 40 weeks. I'm asking it for the average of 40 of the last 40 weeks. And that will looks like that. So now we have a little bit more perspective. At any given point, you can quite literally see, is it currently above average or below average? And this is a really, really quick cheat thing that you can use on not the S&P 500, but any given stock. For example, if I just type in here now, let's say someone says to you, or some financial advisor or some friend says, oh, you should, this is a really good stock right now. I think you should get this one maybe. You can just go ahead and enter it in there. IMPP, there's one stock. We can enter that, and that doesn't look that great, right? It's kind of below average and it's way down there. If I look at Apple, by contrast, we can see, okay, it's literally above average. The blue line is the 40-week moving average. So here, for example, Apple was behaving below average. So I'm going to show you right away a really, really great lesson that is always going to serve you well. It's always going to protect you from bad financial advice. And at any given moment, it's like a kind of BS detector for anything you hear about, even with the stock market. So you can see, look, okay, I mean, it doesn't mean to say, oh, I would buy it for sure, or I would sell it right now, but it's giving you just a barometer general feel. And you've already looked at that. You can come in here straight away. Is this a healthy situation or not? And there's two things you'll look at to decide healthy or unhealthy. First of all, number one, is this is the price. Obviously, we've already seen that with these HLC bars up and down and so on. Is it currently above average? Specifically, is it currently above the 40-week moving average? In this case, yes, it is. Okay, that's one tick for the healthy box. Also, secondly, which direction is the moving average currently pointing? So this is the section we're interested in. This is what's happening. So which direction is it pointing? It's pointing up. This is a healthy situation. Had we looked at this chart, say around here, what would we have thought about Apple? Was it healthy or unhealthy here, which was October 2022? So is it below the moving average or above it? It's below. And which direction is the moving average pointing in, up or down? It was pointing down. So at this point in time, we'd have said, no, this is not a healthy situation. And sure enough, it went down for a little bit. And then, of course, eventually things correct itself. But all we can look at currently is things healthy or unhealthy. If I go back to the S&P 500, which, by the way, is you enter $ SPX for short, that's the ticker symbol, and I enter that. Is the stock market healthy or unhealthy in this example? It's healthy because the price is above and the moving average is starting to just point up like that. So you already have a massive tool here for helping you and protecting you. We're going to add a little bit more to this now, and you're going to start to learn more and more as we go. And these are all tools you're going to need as we come into the next things I'm going to teach you, which is my insider payoff system. And also the things we're going to look at later on today for the rest of the day, because today is all about stock trading. And also we're going to look at my retirement hack, which is we talked about $250,000 for the average American. That's all coming up. You're going to need this, not just for becoming independent and all the good stuff I've told you about so far. When we start coming into that section, again, I'm going to do it all for you. I'm going to tell you what to do and when. But when I explain it, this is what we're going to be building on, okay? So let's add something else. We're going to need this in the systems that are coming up. Let's go down here. We're going to add an indicator. Let's go here to RSI. So it's way down the bottom here, but there's something down the bottom here called the RSI, and I'm going to select that, and you see it come up there, RSI. All right, leave that number there, that's just fine. Every time I change something, I've got to click update, and then it will appear on the chart. So what we've got now is something here called the RSI, and on the right hand side here you can see it's a percentage scale, 0 to 100. Okay, there it is. And think of this as kind of like a health indicator, like almost like in a video game when the person's running out of health or has boosted his health. So, and this middle line here is around 50. It's also a good way of seeing a thing's kind of, very running hot or running cold. And for example here, you see the extremes here getting into shaded territory, very low, very high. So you can see right now it's kind of like, going around its center line, but it's also a good tool for looking at trends and the way things are going. And you can see here, this is kind of trending upwards like that, you can see. But most of all, we're going to be using that later on for a system I'll be explaining in the retirement hack, okay? So that is the RSI. Now, when we looked at the push button millionaire system, and we're looking at the penny stock system, and I explained execution, all that stuff, and how I'm going to tell you which the stock picks are, but then I also started to show you what all the different filters are that I'm looking at. You'll recognize this chart from then, but also you'll remember that I was homing in on something called volume when I was trying to see if there was big money behind those. That was one of the criteria, if you recall, for filtering out when we're looking at the spying tricks, when we're looking at everyone, the insider trading, the chatter levels, and we're also looking at the insider tell, which was the big money getting behind it, and that's volume. So let's add some volume to this, shall we? And it's right there, volume, and I'm going to click on overlay, and then I'm going to click update, and we'll start to see those volume bars that I showed you earlier with the push button millionaire system. And there you go. So you should be familiar with that. You've got grey bars, red bars, and so on, all that good stuff, right? So maybe let's try and explain, what does volume actually mean? It is the amount of buying volume in that stock, okay? If the big money is getting behind it and it's moving the price up, that's a healthy thing, okay? But if big money is getting behind it, you're seeing this volume bar spike, like here, and it's a red one, that means there's a lot of selling volume, okay? They're heavily selling it, heavily buying it. And you'll notice on this chart here, when that's time when there's heavy selling going on, okay, it goes up a little bit, but then it goes down again. Heavy buying going on, look what happened next, it goes up. So it's more of it's much more useful actually when we're talking about individual stocks. So we can look at some individual stocks, and when we look at volume in a second. But that there now is the chart. That most things are there. When we come on to the retirement hack, I'm going to add just one more moving average, but you know now what a moving average is. But this would be a classical way of looking at the chart. And if you recall, this kind of chart is a very big picture chart. It's called a weekly chart. So you can see over many years here, it's a real zoom out kind of chart. We get that big picture feel. And this is always a good way to start your analysis, with that big picture view. What's the really big trend? Is it healthy or unhealthy? Is there buying volume, selling volume, and so on? So I'm going to change now. I want to zoom in. I want to get a bit more detail. And when we're looking at the push button millionaire system, if you recall, we were looking at much more sort of day-to-day action. So I'm going to show you what happens when we change now, zooming in. And what I recommend you do is you have two actual windows open on your computer. One that shows the big picture view, another one that shows the smaller picture view that I'm about to go on to right now. And here's how you would set up that separate window, okay? So we come down here, and we're going to change this from weekly to daily, zooming in, okay? And we're going to change this one down here. We're going to add two moving averages now to 50. Then I'm going to add another one down here, another simple moving average. And I'm going to change this one to 200, right? When you switch like that, that's the important thing you have to remember. But if you can always keep two windows open, they're ready to go. If I click update, so the chart should look familiar to you in that there's that strength indicator like the health bar, and there's that volume that's telling us what's going on with the big money. The thing and of course the HLC bars are there, they're the same. So of course the thing that is slightly different now is we've got two lines, okay? So when we looked at that 40-week moving average in the previous one, that now becomes the 200 days. Because if you think about it, in stock trading, there's only 5 trading days in a week, so 40 weeks times 5 is 200. So if we switch to a daily chart, that line on this chart is the same thing as 200 days, okay? So that just means that's the average price over the last 200 days. We also added another one now, which is the 50-day moving average. This was the average price over the last 50 days. And it just so happens that when the 50-day crosses above the 200-day moving average like that, that's generally considered a bullish thing. And vice versa, if the 50-day crosses below the 200-day like that, that would be considered a bearish scenario. So you can look and you can see the results of that right here. Look what happened end of January this year, and you see the 50-day moving average crossed above the 200-day moving average. Initially, it went down a little bit, but ultimately that did indicate higher prices going ahead, okay? And everything else is the same. Like I said, there's the volume, there's the RSI, and this is that chart I was looking at in the push button millionaire system. If I look at a chart now of an individual stock as opposed to the big picture stock market, let's look at an individual stock. Let's home in on something there. So here's a great example. The ticker symbol here is BAOS. And I mean, you can see here, there's some of the things were mentioned in the push button millionaire. We got that big volume spike here that takes it above the 200-day moving average, right? So I wanted to just throw you in at the deep end earlier, okay? I talked about execution of what to do with my instructions, and I explained the system I was using. I'm going to do it all for you, but as I said, I want to also educate you about the system and the process so you can look at this thing for yourself. And now hopefully you can start to see what it is I'm actually looking at, referring to why I'm making the decisions I'm making. And there's that, again, big volume spike, price rises up, and then it starts to come back down closer to the moving average, the 200-day moving average. Can you also see something going on here that I just talked about that is a bullish indicator? Look at the moving averages, the 50-day and the 200-day. Can you see that the 50-day moving average is just crossed above the 200-day moving average. So that is a bullish indicator, remember? So we've got a lot of things going on here. We've got high volume, big buying, and the price is going up. It's coming back down again, which is a healthy thing. And we've got that 50-day above the 200-day, which happens to be called a golden cross, So you see a lot going on with that chart. And hopefully now you can look at this with fresh eyes and the push-button millionaire system in the back of your mind and see, okay, you can actually see what's going on here, right? So it doesn't look so alien to you. And like I said, you're not just being spoon-fed. You understand the decisions that are being made, why, and what's going on. Because obviously, look, there's big buying behind this thing. It's got a lot of upside. It's ticking, all of those boxes. Now, I'm not guaranteeing this is a pick right now. I mean, it's looking good, but I will give you the exact examples of what to do. So let's just have a quick review. And I'm going to ask you some questions, and at home you can just try and think, okay, try and figure out the answers. I'm going to pause for a second, let you try and answer the question, okay? Okay, so first of all, this black line in the middle, they're all the same though, but I'm using this one as an example. What does that mean? What's going on with the action right here on that black line? What's it telling you? So what that's telling you is, because this is a daily chart, meaning each one of these, remember we switched from a weekly chart to a daily chart. So instead of this now meaning 1 week of action, because it's a daily chart, but this is just 1 day of action. On this particular date, the market opened, and during the day it fluctuated between these levels here of looks like about 7 and 12. But where did it finish the day? Where did it close? What price did it finish at on that particular day? It may have fluctuated up and down within this range, but what was the closing price? The closing price was at $10, all right? So that little horizontal peg means that's where it finished though. And that's the price we're really most interested in. It's very instructive to see what's kind of going on. Like on this crazy day here, look, it went all the way up there to $23, up and down, and finished the day at 9. So that's kind of some crazy action there. So what's that's telling us? That's saying, listen, what it really was is it finished the day at $10. That's where it is, okay? That's what that means. What is this chart down here, and what's it telling you? So this is the RSI, relative strength indicator, kind of like a health bar for any given situation, between 0 and 100%. And this line in the middle is telling you how healthy or over healthy it is. And you can see this one's doing up and down, up and down. And it's also telling you the kind of extremes, that when things get too extreme, it's going to come back down again usually. And also trends that are in place, okay? So what's interesting about this is something that, this is where the RSI can help you out. If you look here, while that price may have looked like on the chart to be drifting down, and it was, look at what's happening though to the relative strength indicator. If to the naked eye this was just drifting lower and lower, but look what was happening down here. The relative strength indicator, meanwhile, was drifting higher. And look what happened next. Boom, that price shot up, like tripled. By the way, this stock tripled your money in 1 day. Okay? If you know what you're doing, like I said, this is the fastest, easiest way to get you where you need to be if you're following the 3 rules: patience, organization, and discipline. So just look at that. There's how the RSI was kind of giving you a clue. Hang on, this isn't as bad as it looks. This thing's going higher. Bang. Now you can't use the RSI as the only thing. It's like, just think if you were driving your car. This wouldn't be the speed gauge. This would maybe be like your something else, like a oil pressure or something like that. And the volume might be the RPM gauge. In fact, RPM gauge is a pretty good analogy for the volume bars here. So remember, that's a volume bar. The red meaning selling, the grey ones meaning buying. So think of that as like a rev, RPM gauge in the car. If it's revving high and the car's moving, in other words, the price is moving, there we go, high revs, high movement of price, that's a healthy thing, right? Now, can you imagine if you were revving your car, you put your foot down on the gas really hard and that volume goes up, but the car wasn't moving forward? Or even worse, it was rolling backwards. So there you can see how the RPM gauge analogy of volume is really instructive. Think of volume as the RPM gauge, revving up high and moving up with the price like that one did. Healthy situation, right? That's a great way to think of the RPM gauge. So let me ask you another question. What is this red line in this chart and what is the blue line, and what's their relationship regarding predicting fairly well high or lower prices ahead? So the clue, if you're unsure, and it's a good thing to always check because it's not a given that the red and the blue will always be, it depends on how you set things up. If you go to the top left, you'll see moving average, or MA 50, and also red line, MA moving average, is 200. So the red line is the 200-day moving average in this scenario, and the blue line is the 50-day moving average in this particular chart setup. Now, if you were to switch back to the weekly chart, again, you would look up here to see what was going on. And if you remember, when the 50-day crosses above the red line, that's usually an indicator of higher prices ahead. And if it crosses, the blue line would cross below the 200-day, that's usually an indicator of lower prices ahead, although not necessarily immediately, within the kind of medium-term month or so ahead range. So you already know a lot. That chart now, okay, if you're brand new to this, it's a lot to take in right now, even though I've explained it in really simple terms, and there's not a lot to it. And again, that's why you're getting a recording of this, so you can go back, rewind, at your leisure. Okay, now, so something I'm going to do as your mentor is I will always be pushing you further and higher. And if at any point it gets too much, you can always, in the case of a video like this, you could just rewind, or you can just ask me, say, okay, let's do that again, or something like that, or can I teach it a different way? So what I'm going to do now is we're going to keep the momentum. One last thing I want to do on this video before we just go back to the studio is I'm going to teach you two of the biggest tricks that we have up our sleeve for stock trading. It's different to the push button millionaire penny stock system I explained earlier, using nothing more than what you've learned already just by looking at charts. I'm going to show you two separate systems, and I refer to these as the insider payoff and a gift from banks. Let's look first of all at the one I call the insider payoff. Okay, so it's really, really simple. You know what this chart is now. I'm going to enter a ticker sample here as an example of something that's already worked using this system. So look at this chart. This is obviously, it's a day-to-day chart, right? And there's that all-important, this is the most important one. In the case of a daily chart, the 200-day moving average. Remember, if we switch to a weekly chart, which is a bigger picture view, it becomes a 40-week. It's the same line. So just look at that. And here's the price action of this particular stock. And obviously, it's trending upwards. But can you notice anything regarding how it reacts, the price of this stock reacts in relation to the red line, the 200-day moving average? This isn't that common. This is quite common for the type of stock we use this system with. Can you see that this stock is kind of bouncing along sideways, just like that, until it hits, almost like collides off of the 200-day moving average, just like as if it was a ball going towards a wall and then bouncing off of it up like that. Can you see that? And since here, this has doubled in value. Now, something you probably maybe heard me say before is if you take $1,000 and you double it 10 times, it becomes $1 million. Okay? And you think, okay, well, that's great, but how can I double my money 10 times? Well, you're looking at one example right now, and this is just one of many. Look, there it is. There's down there, it bounced off the wall, this 200-day moving average at around 12, and then it went up to about 24, 25. That's a double of your money. Do that 10 times, and $1,000 becomes $1 million. So what's the trick then? Well, that's simply it. That's all it is. So let me add a bit more detail to this. Now, one little clever tool I'm going to show you on stockcharts.com is if you come down here to this little thing that says annotate, and you click on that. And now I can, if I hold down the left click on the mouse and use the right click as kind of like a pen, I can draw stuff on here like this. And that's all I'm doing now. I'm holding down the left button and using the right button as like a pencil to sort of drag this line around like that. I'm swirling my mouse around in a circular fashion, and that's what it's doing. So you see how remember those horizontal pegs that showed you the closing price, how the price closed for the day. So if we can connect 3 of them in a row, especially when it's kind of horizontalish like that, we have what's called a support line. So there's one there, and there's a couple there, and there's one back here. And the longer the better. The longer the line is, the better. The more horizontal it is, the better. Better meaning that it means more. And by that I mean this stock clearly has, whenever it goes down to that level, buying comes in. And that's insiders buying. That's what's going on there. Insiders, the big institutions, and that's why I call this system the insider payoff. The big institutions have clearly, you may have heard of computer trading. They have got a program that's buying this stock whenever it hits that level, and that's what's making these bumps off the price all the time. Okay? The other thing is that people are watching, the big institutions and their computers are watching this 200-day moving average closely. So when it gets to there, they don't want it won't be allowed to go below. I mean, it doesn't always happen, but usually if a stock's marching upwards and everything else is normal, that's what creates this action with this sideways bouncing along, and then it bumps into this rising, it must be a rising moving average usually, and then it sends it flying high, just as if it's a ball, like I say, hitting a wall that's kind of pointed upwards a bit. And so, in other words, there is support. There is a kind of what called a support for this stock at this price. Whenever at that price, whenever it gets down there, the price is being supported by this buying going on, which happens to be along that line like that. And that line is telling you that the insiders are buying that stock at that level. And when that line collides with a 200-day moving average, more often than not, again, not always, remember, we can't say anything for certain, but we're playing the odds. And the odds favour a stock like that bouncing off and going higher, and there's a double of your money. So there's one more thing there we can look at the chart, isn't there? We've got the price action with those little horizontal pegs where it closed. We've got the 50-day moving average. We've got the 200-day moving average, which in this case is the real trick here. The combination of that sideways action on a clear line of support like that going up. Now, if this stock were to, let's say I was doing this, and then on one of these days the price was down here, right? That wouldn't count. That would have broken that support line, and that kind of makes it looks like it doesn't look as reliable. So the only thing that allows me to draw that straight line is because all this price action is going on above it. If there was one down here below, like I say, it would kind of throw it out. So there, in a nutshell, what you're looking at, do not underestimate this picture you're looking at right here. This picture right here I'm really sharing our secret sauce now. This is what quite simply allows us to create astonishing gains, and you will now be, you can now see for yourself how that's operating. It's really that simple. So many people, they read so much into the stocks and reading accounts and all this stuff, they get so into it. But the bottom line is that right there is all that matters. Right there is doubled your money. And just this one trade alone has absolutely killed all Wall Street experts and all the big institutions. So don't let them intimidate you, right? Right there has destroyed them all. It's a very, very simple, beautiful system. Let me pan out and show you what that would look like in the weekly chart, which is where we start off, isn't it, for that big picture view. So if I change this to weekly, remember I also have to change the averages, don't I? So let's get rid of the 51 and change this one to 40. 200 days is 40 weeks. If I switch to a weekly chart, I have to change that. So look at that. Now that picture makes it very clear, doesn't it? That picture really says 1,000 words. What can you see here, apart from the thing I just explained? You can see a lot of clues here that this one was going to pop. First of all, look down here. Look at that huge grey bar. There's massive insider buying of that one at around $5, and that took it back above this all-important moving average, which is a 40-week. Same thing on a daily chart as a 200-day. It's the same line. And then look what happened here. It bounced off of that 200-day, and it did more than a double. Doubled your money once, okay? Then it marches sideways for a bit, kind of consolidates. Think of it as it's like refueling for like the next move higher. And on its way, there's that line, about $12, bounces off again. Remember, the clue here is that this rise, the moving average, the 40-week moving average is going up. And see, that is what creates that momentum there. See how it goes, boom, bounces off and shoots up, doubles. So here's a stock where you just in the space of within a year, you could have doubled your money twice. And we're talking about taking $1,000 and turning it to $1 million by doubling it 10 times. Well, there's 2 times right here from a single stock. And that is the insider payoff system. So that's extremely powerful. The other one I want to show you is, I call it the GIFT system. And that stands for Global Intelligence Financial Trader. You don't need to worry about that. It's just a name that I've given it. And this one really is a gift. It's a gift from the big banks for really as much money as you like. I'm going to show you one example here. By the way, the ones I'm showing you now are actual real-life examples using our system that I'm on record for issuing. So here's that big picture view again. And you notice this one didn't, not yet anyway, bounce off of that 40-week moving average, okay? But it kind of did down here. It wasn't rising yet. So there's 2 scenarios. The first one I showed you is where it goes sideways and bumps into a rising 40-week moving average and bounces off of it. The other situation is where the 40-week moving average is actually kind of flat. And then what we're looking for here is a stock that, can you see how it kind of, once it gets below, it stays below. And then we're looking for the scenario of where it's leveled off and it goes back above its 40-week moving average, maybe pulls back a little bit, like you can see right there. So it's nice and close, and then boom, up it goes. So you can see that for an example like this, the entry point for this system would have been around $2, and it's now up around $6. So that would have been a triple. That would have been a triple of your money, which gets you to $1 million even faster. So if I zoom into the daily chart for that one, let's have a good practice here. If I switch to daily, I'm going to have to change a couple of things, aren't I? I'm going to have to make this one 50, because we always look at the 50-day on a moving average. Most of all, to change the 40-week into the 200-day, I go to simple moving average and change that to 200. Okay, that's as simple as that. Again, though, I recommend having 2 windows open daily and weekly, so you don't have to keep doing that. And then we can see a more detailed view. How many things can you see going on here that are favorable for this stock? Well, again, first of all, we're back above the 200-day moving average. Remember, I showed you that quick cheat of a healthy stock. It's above the moving average, good, and it's skimming the surface. And can you notice how it's like once it gets above it, it's using the moving average as kind of skirting off of it, bouncing off of it, even though it's flat. And then we have, don't we? We have what's that happens there when the 50-day crosses the 200-day. That's that bullish signal called the golden cross. Remember? There's another bullish symbol. And then look at else what's going on. There's lots of buying. Now, although there may be a big red bar here, that's okay because it's kind of outnumbered by all the black bars, okay? And it's bound, some people are bound to take profits around here. And so that's what's going on there. But look at all the grey bars sending this one up higher, and up and up and up she goes. And maybe this one turns into the other system. Maybe at some point this will start jogging along sideways on a support line and bounce off of it. Either way, these are 2 incredible systems that really quite easily, I think, transition from what you've already learned by just looking at simple charts. You have 2 killer systems there. If you enjoyed this, then there's a lot more free training waiting for you at stockgossipfilter.com, including how to beat 70% of investment pros in a single trade.